Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
And off of the weekend, I love what Gilles Moec said at AXA in Paris. He said it is searching in vain for information. In charge of information for Bloomberg Surveillance, Lori Calvasina with RBC Capital Markets. I would say when you walked in today, what did you first look at? But like all of us, you were working all weekend. What was stirring in the Calvasina system this weekend?
Well, so I'll tell you, on Friday, I wrote my weekly. And then what I was doing Saturday night and Sunday night, because I have little kids. So, I have to do a lot of this at night after they go to sleep. But I was reading.
Oh, please. You said to them, watch the Masters. Mom's got to work.
I was saying to Gargi earlier, I'm now starting to watch White Lotus. This is the first TV show I've watched in years because I just don't have time. But honestly, my free time this weekend, I was reading through earnings call transcripts. And then I was also reading through conference transcripts. And my team had done a first pass on me last week. But we were reading across the Russell 3000, not just the S&P 500. And I'm a little bit of a transcript junkie. I have been really since 2016, 2017, 2018. And we've learned that in these periods where everything is uncertain and shifting, don't just look at the S&P 500. The Russell companies, the smaller cap companies, have simpler business models, and they can often sort of help you home in on specific issues with a lot more clarity.
And this is so much an honor of work at Bloomberg by Rich Yamarone, who we lost way too early. Yamarone did the Orange Book, which invented, forget about all the numbers, just listen to people after someone like Lori Calvasina says, great quarter.
Exactly. So, Lori, what have you guys done at RBC and your group there with your S&P 500 targets and your earnings? So
we've cut them twice this year. March 17th was the first time. It was the Thursday night after Liberation Day. I can't remember what date that was that we did the second cut.
I can't remember what year it was.
And time is warping in here.
It is.
But we cut things twice. And what we did in that sort of early April adjustment was we shifted from our bull case to our bear case. And we've been telegraphing that we would need to do so if we broke below 10% from the February peak. What was interesting was pre-Rose Garden, the market was trying to hold in sort of garden variety, 5 to 10% correction territory. The market's kind of doing the same thing right now in growth scare territory. We went down on Tuesday's close and touched minus 18.9% from the peak. That is very similar to what we did back in 2018, and that's basically in line with your average kind of growth scare where there's a fear of a recession or big breakdown that doesn't happen.
So what do we... I guess let's just go to the earnings front since we're starting to kick into the earnings season here. It's not so much what we're going to hear about their first quarter performance. It's more about what companies are. Do you expect any companies to provide guidance, or how do you think about the earnings outlook here?
So there are some that are still doing it, and there are some that are not. What I will tell you is a positive development, Paul, and I know I was sort of ranting about this on television last week, but companies are finally giving us a more detailed conversation about their exposure, not just to China. We've been hearing about that since November, but they're finally starting to talk about Vietnam and Mexico and Canada and other countries. So they've been sort of shocked into having a more honest and detailed conversation with the sell-side community and the buy-side community, frankly. And to me, that's more important than whether or not, we suspend guidance. Some companies are baking some tariff in, some aren't. But it's the level of discussion. We just have needed more disclosure. I think that's why we've seen such big gaps in here.
So what do we do going forward here? Is it, are you recommending more cash than you typically do? Are you recommending a bigger treasury portfolio than you typically do, or just?
So I stick in the equity world, and so I don't. I always like U.S. equities. I tend to say, and we haven't made a change in our target. We're still sticking with the 55-50. We have said if recession is starting to get baked in, we're going to have another break lower. I don't think that's baked into the price now.
Okay.
But I was on the road last week with Amy Wu Silverman, my partner in crime over at RBC, and we were seeing a bunch of clients, and we actually saw these younger guys who had only been in the business a couple years, and they just sort of, I forget how we got on this topic, and the advice I gave them, I think, applies to everybody. I said, we never know in these periods in the moment where we bottom. We never know how low exactly it's going to go. We have our milestones. We're going to check those off. We're going to keep an eye on those. So, but we want to do two things right now. You want to look for the defensive opportunity and the rebound opportunity. And you kind of have to do both. So on the defensive side, we've liked utilities all along. We're sticking with that. On the offensive side, we really like financials. And our point to these guys was, you're not going to be able to peg the bottom, so don't even try.
All right, so financials on the rebound, did you hear anything on Friday that it kind of gave you greater conviction when we heard from some of the big banks and we heard from Goldman today?
Yeah, so, we're definitely seeing, the benefits of increased activity and getting some rotation in the market and things, generally functioning properly. I know there were some questions about that on the bond market last week, but that seems to have been, died down at this point anyway. But I think that what I really have heard, from the banking community in particular is their ability to manage through crises. And so all of the learnings from the GFC, even SVB, frankly, I think was a great road test for these companies. And I felt like I heard that confidence come through last week.
What's the idea of do nothing? Is that an efficacious strategy?
It is. Sometimes you need to sit and listen to the market and let things play out. And I know that is difficult for Wall Street people to do, but I do think this is one of those times.
Excuse me, folks. I'm distracted learning about the amazing Blue Origin flight we're going to see here in 20 minutes. Really extraordinary. Lori Calvasina with us, for those of you across the nation, across Canada, of RBC Capital Markets, the Royal Bank of Canada. Good morning worldwide as well in your commute. And of course on YouTube, subscribe to Bloomberg Podcast. Just can't say enough about the YouTube distribution. We knew it was working, but in this crisis, we've been humbled by the growth. Thank you so much. Their futures up 88. I mean, Goldman Sachs went out, and it's a completely unfair question to you. They popped a $40 billion share buyback, 25.2% of their market cap. Are we going to see more of these shocks where people just say, we don't know what the White House is going to do, we're going to be opportunistic?
So when I was talking to investors last week, we were sort of debating PE multiples. Can you even really, value a company right now when we don't have visibility into the earnings? And what one investor told me was they're really buying good management teams right now. And I think that's a very, sort of smart way to think about it, who can navigate through. I will say on the buybacks in particular, when I did my last round of updates on my S&P earnings model, we actually had actual data in for share counts as of 1Q, and it grew by, I think, 0.9% year over year, and that's the biggest we've seen, but we've had a string of several quarters where the share counts have been growing. So I don't think that, and of course you have buybacks, but there's issuance, but when you do all the math, right, like we haven't had a de-equitization theme, the way my former colleague Rob Buckland used to talk about. So it's interesting, to sort of hear that news in the context of this hasn't really been a great period for shrinking the share counts.
Paul, is de-equitization English, or is that Lori Calvasina?
I stole that. That's Rob Buckland, one of my old mentors at Citi.
Yeah.
Where are we with small and mid-cap stocks these days?
So they were trying really hard before the rose garden to bottom, and you're actually seeing some outperformance on the big down days. As we have moved past that event, investors are sort of toggling between sluggish growth, near stall speed, or recession. I don't think that it's a clear-cut case for recession yet, to be honest, but the small caps are acting like it is. And so we've continued to see some underperformance. You've also been starting to see growth outperform value, which is also consistent with the sluggish economy. So there's opportunity there. We know we need to buy them mid-recession if we get one. But in the short term, they're expressing the economic angst.
You mentioned banks and financials. Just, to pick on them, in this milieu, is this where smaller banks throw in the towel and we get an M&A surprise in small and mid caps?
I think that, an old back in my first investment bank I worked at, an investment banker there once told me that you look at confidence, you look at the VIX, for M&A deals, and we have lousy confidence, and we've actually, no one's debating if the VIX is broken anymore. We've seen a breakout there. So I do have a feeling, at least in the short term, the kind of gloom on M&A that you heard from some of the bigger banks late last week is probably deserved.
And we should not expect or rely upon the Fed to kind of magically fix this. They can't really deal with consumer confidence and those types of issues?
Well, look, we have a data-driven Fed, right? And I think that let's put aside what was going on in the bond market last week, right? But if you just think about sort of the tension between, inflation and the potential inflation that may be coming from the tariff policy, that it's a tough spot for them to be in. That is part of their mandate. And the labor data is holding up. And to be honest, in everything I've read, and I've been reading really closely across the Russell 3000 since probably like the last 2 weeks of February, and I'm not seeing a lot of alarmism on labor. We do see it in the survey data, but in terms of what companies are actually saying when they're going out to conferences, when they're on earnings calls, they're not ringing the alarm bell on labor right now. Even
lower wage labor, because President Trump and his administration have been pretty effective in kind of slowing down, if not stopping, illegal immigration. Are we seeing that in the housing market, are we hearing any of the agricultural producers?
So I didn't read any home builders from like the last week and a half, but in my last batch of reading, I did read a couple of the home builders that reported early, and they specifically said they weren't seeing any kind of derivative negative pressures on labor because of immigration.
Right. Damien Sassower is north of New York City. You should see what he's got, like 8,000 square feet.
Oh, good for him. He's a player.
The Christmas tree, it's almost as big as Scarlet Foos. And, Damien said it's just booming. He said there's absolutely no let-up whatsoever.
And look, I will say, if we're thinking short-term, long-term, if you go back to 2018, companies didn't really raise the alarm bell on tariffs until like September in that conference season before the earnings reporting season, kind of post-Labor Day. So it may take some time to see the residual impacts. We are seeing in company commentary indications of tariff pre-buying. We saw one of the banks call that out. And also, some of my clients I met with last week also clued me in on this, but the idea of managing your inventories and pulling forward some of that inventory. I would, we called this earnings season in our latest weekly as potentially like a box of chocolates. We don't know exactly what we're going to get. We could get some good ones.
You have to stop talking, but if you could just sit there, because when you sit here, the market goes up. It's the way it works. S&P futures 90, Dow getting up near up 500, 474 on a Lori Calvasina Dow Jones Industrial Average. Ms. Calvasina is with the Royal Bank of Canada, RBC Capital Markets.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
We're going to digress here. We got too short a visit with Gargi Chaudhuri, but we got to take the time out here because it's a time of year where someone like me looks out the window and goes, I got to get in shape. We got a division here today in the studios, folks, our wonderful studios here at Bloomberg. Over here on the north side of the studio is the out of shape, someday we're going to run studio. On the other side of the studio, Lisa Mateo and Gargi Chaudhuri are the real deal. Gargi, how do you get motivated to jump into the Hudson River and swim 5 miles?
2.5, but I will say that the Hudson is cleaner than its reputation has you believe.
See? But again, just the whole
the look
Ironman,
that Tom's giving
marathon,
me right now.
Ultramarathon.
Okay.
There are certain people that do that stuff.
I get this from Mrs. Keene. You got to learn to stretch. Can you see me stretching?
Yeah.
Lisa and Gargi, how do you stretch? What's the most efficacious way to stretch?
Yoga class.
Say it again.
Yoga.
Oh, there you go.
Oh, she's
What's
good.
yoga? Lisa, how do you stretch? We got to get out here to the bottom.
You're doing a little Pilates, maybe? I have a machine in my basement.
I have a machine too. Vet Bill has it. It's a dog Pilates. Thank you for that. These two are really committed to doing Ironman and triathlon and all that. It's wonderful to see that. Gargi, I got to get to the bond market. One L Fink out making the circuit this weekend. Explain the worry at BlackRock that we hear from Larry Fink and that we hear from Gargi Chaudhuri. Color the quality of the angst.
Color the quality of the angst. I love that. So I think the best way I can speak to it is what we saw sort of over the 48 period where 30-year Treasury yields moved up by, call it, 72 basis points.
Price down.
Yields moved up, price down, yes. And I think a part of that, we all know, was to make room for the auction. Some of that was the big basis unwind. It was around swap spreads. But I do want to be very clear. There was no panic in the market. There was volumes trading. We monitor a lot what ETFs are doing as a percentage of tape. You had a few days where ETFs were allowing to be that release valve of the market. So yes, a big fear around what deficits might do, which is leading to long ends moving higher. Today, they're a bit stable, but certainly that's been the price action for long end, which is why we think the belly of the curve still offers you better value. But at the same time, not panicked move. There's still risk changing hands. I think that's really important for all your listeners to be aware of.
So just broadly speaking, in terms across all of your portfolio, I mean, BlackRock's got a couple dollars under management. We understand that. How do you guys internally, when you sit down and have your meetings, say, what are we going to do this week? Because realistically, we have no idea what's going to come out of the White House, which will whipsaw markets. How do you guys at BlackRock kind of think about that?
Yeah, so we have a lot of internal meetings, as you point out, and senior investors get together and talk about what they're seeing in their corner of the markets. And I think one of the things that everyone's trying to do is separate the signal from the noise. Okay. So there obviously has been some noise around, especially this weekend, around some exceptions perhaps, and then some tweets around maybe those exceptions are not exactly what we first thought them to be. But taking a giant step back, coming into this year, what was the tariff rate? And what do we think projections for tariff rates are going to be in the next few months? Looking at the soft versus the hard data, obviously soft data, a little bit worrisome. We saw that Michigan softening again and inflation picking up pretty meaningfully in the Michigan 5 to 10-year inflation expectations. But at the same time, in the hard data, you have not yet seen any of the concerns around rising inflation and slowing growth. So recognizing both of those and most importantly, telling our clients what to do. That's our role. Telling clients, stay invested, add some diversifiers, add some hedges, clip some coupons in the fixed income markets.
What do you do with cash? Do you increase cash? Do you wait with cash? I mean, to me, to our listeners and viewers, that's a key question here.
Tom, great question.
It's my only good one today. Go with it. This is it. I'm going home.
Cash has seen a lot of inflows. SGOV, which is our T-bill sort of ETF, has seen the most amount of inflows. It's one of the highest gathering asset classes this year. So investors are thinking about cash as an asset class. I think we need to recognize that there continues to be a role for things like SGOV in your portfolio. But what we're telling investors is also think of opportunities to, sort of look at areas of the market that have had perhaps too much of a correction. We're telling investors, add some minimum volatility, add some gold. Think of areas to buy quality technology in your portfolio.
So longer term, I mean, again, the administration is promising perhaps some near-term pain for some longer-term gain in terms of productivity, investment. Is that something you guys think about, or is it just trying to deal with the day-to-day?
No, absolutely. That's the job. Trying to think about, like I said, what is the signal versus what is the noise? In the future, is the signal towards a more productive world? In the future, are we going to get to a point where we can point to higher growth as a result of all of the noise that we might be getting today? I think it's a little too early to tell. I'm looking at price action in the markets now, and I'm very relieved to see that bond markets are behaving in a pretty normalized manner, which gives us a little bit of confidence in where equities can go today.
Okay, this is key. Thank you for bringing this up. I've got a whole set of things I look at, some of them pretty esoteric. I look at LIBOR OIS, the new one, SOFR 10-year. Damian Sassower looks at SOFR 2-year. They're behaving well this morning. Sweeney's brilliant. He looks at the 2s, 10s spread. What does Gargi Chaudhuri suggest we should look at to say the bond market's deteriorating, the bond market's okay?
Yeah, absolutely. So I would say look at what on the run versus off the run treasuries are doing. So how much are off the runs getting, how much illiquidity is there in the markets? That's one thing. I would look at the repo markets. Are the repo markets functioning properly? Is there any squeeze in the
we're hearing from Ira Jersey when he's not watching Aston Villa that the repo market is functioning properly. Do you agree?
As of right now, absolutely. The repo markets are functioning properly. And I think that's one of the reasons why we haven't found this move over the last week to be panic-inducing.
Paul, panic-inducing. You just gave Paul a panic. He thought he was going to get his Vespa repoed.
Yes.
The answer is the repo market, folks, is short-term paper. I call it the trust market. It's wrapped around lots of they're on the BTMM screen on the Bloomberg.
All right.
And Mike came up to me. He said to me once, he says, "Do you have any idea what one single statistic is on the BTMM screen?" I said, "No, Mr. Bloomberg."
Treasury and money markets. No.
I don't. Gargi, thank you so much, particularly for that. What's the key thing with yoga? Like, inhale deep. What's this thing called? I'm on radio. I'm doing
a pose. It's a pose.
What's this thing called?
I think you're trying to do the mountain pose. Is that what's happening? I think Tom's doing the mountain pose.
We're going to play Mountain as the next song out. Leslie West, get prepared. Gargi Chaudhuri, thank you so much. Greatly, greatly appreciate it.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130.
Trust Company of the West is TCW.
Yep.
And they have all sorts of wonderful people. We can literally, the quality is so good, like their good competitor in LA, Capital Group, that we can take anybody blind at any time.
Mm-hmm.
Penny Foley is flat out a legend out of TCW in Emerging Markets and joins us right now. You've aged after last week.
Absolutely. I'm exhausted.
You and I have never seen this. I mean, you go back to Ecuador, you go back, Carl Weinberg's at Lehman, you go back to the financial crises, 98, you could feel the sweat on the beach.
Yep.
All the others, this is unique. Why is it unique for Penny Foley?
Oh, it's the uncertainty factor is huge, and that means that you got to have higher risk premia. There is an absolute surprise at every level. I think EM growth is really facing multiple shocks. Uncertainty, which has had an impact on business and consumer. Decline in real income, supply chain disruptions, and really a huge negative wealth effect. For the rest of the world, it's been more of a straightforward demand shock. So I think the downward pressure on U.S. growth, all other things being equal, is estimated at sort of 1 to 2 percentage points for the next 4 quarters. The impact on the rest of the world, ex-China, is probably only half that. And you said earlier, central banks have the ability to cut rates in EM and also provide some fiscal stimulus. I think the differentiation in EM is going to be key. Obviously, oil exporters are going to be hurt. Importers with relatively closed economies are going to do a whole lot better. What we did was essentially re-underwritten every high-yield position in the portfolio to identify those that'll face a higher default risk in the current environment. And we've used kind of the baby with the bathwater sell-off in the course of the last 10 days to pick up select names that seem significantly undersold.
You want to give us a name?
Mostly corporates, small corporates. But we're very, very cautious because I think the technicals are still really pretty challenging, and a lot of the sell side have been told to stay away from risk.
That's rude of me to ask. Do it. Yeah, compliance for TCW is listen to this in the bed in LA.
I can ignore rude comments. I have for years.
Penny, from your perspective in emerging markets, is U.S. economic exceptionalism, is that over?
It's a great question. I mean, I heard you a little earlier saying that, the U.S., markets last week were very unusual. You saw yields up, bond prices down, currency was weaker, stocks lower. That usually spells capital outflows. And it's pretty common in emerging markets. In the case of the U.S., you've seen that happen maybe just a handful of times in the last 30 years. And, and as you both know, foreigners own about a third of the U.S. Treasury market. They own 25% of U.S. corporate bonds.
Wow.
And close to 20% of equities. So the potential for outflows is not inconsiderable. The erosion of social and political norms and loss of trust could pose longer-term issues for the U.S., but in my view, it's probably just at the margin at this point. I mean, there are just too many factors that support U.S. dominance. I mean, it's entrepreneurial culture, technological and scientific advances, flexible labor markets, and just the sheer size, and depth of our capital markets. But no question, the narrative around U.S. exceptionalism has lost a bit of its steam in the last couple of months.
Where do you see value out there these days in your world of emerging markets? I wouldn't even know how to look or value or characterize value, but where do you guys see opportunities these days?
You know, what's interesting, in EM, you've seen outperformance relative to the developed world, to the U.S. So somebody's seeing value somewhere. Yeah. And I think they're, on average, you've seen EM spreads outperform U.S. peers. And this compression is at every rating level. So there are a couple of reasons for that. Most EM sovereigns are in the early to mid stage of the credit cycle, having gone through, a pretty big restructuring and default cycle in 21-22. Also, since the taper tantrum, a number of EM sovereigns have undertaken pretty broad-based structural reform, so that makes them, resilient, or more resilient in an external volatility. And in fact, this year or last year, you saw positive EM rating changes exceed negative ones for for the first time in in a decade.
Penny, with the time we've got left, I got to ask you about LA. Mr. Amundsen was one of my first supporters in doing this act years ago. The Trust Company of the West goes back to Mr. Day, 1971. You're a pillar out there with the LA Opera and all. How's Los Angeles doing after the fire?
I think the fire obviously was a huge issue, and what has astounded me is how quickly people came together as a community to rebuild. TCW, for example, was absolutely extraordinary. There were a number of people that lost their homes at TCW, including our CEO, and they came together to really support employees. We all came into the office. There was nobody said life is life is too short. There was just a real great sense of community, probably more so than you've seen in Los Angeles for a long time.
What's the number one thing the East Coast gets wrong about the larger LA experiment? I'm sitting on Sunset Boulevard going, this place is rocking with all the gloom and all that. What's the number one thing East Coast idiots get wrong about LA?
Well, I think they look at LA and say, well, it's soft, kind of, not so serious.
You mean lefto wackos?
Yeah.
Okay,
not
great.
so
Continue.
serious a place. It is a serious place. I mean, no question. When I get on a plane to come to the East Coast, I get all revved up. When I, going out to Los Angeles, I sigh. It's going to be quieter. It's going to be, but it's a lot of people on the West Coast have come from the East Coast. There's a very vibrant industry away from the the movie industry, and the movie industry itself is driving a lot of innovation and change. So I think it's very exciting.
Penny, thank you so much for visiting. Penny Foley with us, iconic at TCW, and of course with the Emerging Markets Group.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is way cool. Paul Sweeney and Tom Keene, we welcome all of you. Extended conversation now with Henrietta Trays. She's killing it in Washington, discussing this moment we're all living, and you wonder where it came from. In her youth, she worked for Marty Zweig Demenum. And before that, she worked for somebody of all respect across the aisle, Joe Crowley, a Democrat from New York. Henrietta Trays in studio here in New York. What was it like working for Joe Crowley, and where are the Joe Crowleys today to save the Democratic Party?
Oh, it was so great. Some of my most incredible, impressive memories are from the folks I met there, Kevin Casey, Greg Shiowitz,
There's
mentors.
a primal scream, including from Republicans, Democrats, find your inner Joe Crowley. Where is it?
It is searching for an issue that they can seize on to unite them. I will say I notice a lot of that with the Ways and Means Committee chiefs of staff right now around the issue of pharmaceutical tariffs. the Democratic Party has a real chokehold on the topic of healthcare in this country. And so as the president starts to migrate into the Section 232 on pharmaceutical tariffs, I think the Democratic Party will really start to coalesce, and we'll see that.
Paul, she's the only one I know before 8 a.m. that can talk Section 232.
Yeah, serious stuff. So, Henrietta, what's the next? I know Congress is out for another recess. I don't know how they happen. They seem to have more recesses than anybody. But what's the to-do list over the next couple of weeks that's really going to be impactful?
There's only one to-do list, and that's get the tax bill written. I think it's going to take until the end of the July recess, which is July 24th. So if you want to circle a date on your calendar for when this whole thing could pass, that's my base case expectation. It's going to be a really tough road from here, but I do not buy the narrative that somehow the Freedom Caucus is going to vote against a tax increase on all Americans. As y'all know, this is not a tax cut. There's very little that's stimulative from this bill, but there's no way that you vote to raise tax rates on every single income bracket. Maybe a few. Maybe you do the sea salt, the corporate salt rate. Maybe you raise the millionaire tax. But other than that, you've got to vote for this bill.
So you have to vote for this bill. And is President Trump, obviously his sway over his party, his sway over Congress seems extraordinarily strong at the moment. Is that a time for him to push through everything he wants? Because is this something that may not last 4 years?
Exactly. And that's my base case expectation, same as it was during the first term. You get 1 year to pass legislation, and then the next 3 are all devoted to tariffs. The difference now is that he gets all 4 years for tariffs, 1 year for a tax bill.
Hugh Von Steenis with an incredibly important FT essay this weekend. Mr. Von Steenis will join us next week, I believe, darken the door here in New York, where he hearkens the madness now back to Nixon 1971. I'm the only one east of the Mississippi River that remembers that. And the answer is Anne Marie Horton will speak with the Secretary of Treasury today. He's had a pretty good weekend distancing himself from the rest of the Trump mob. What will you listen for from the Secretary of Treasury today?
Yeah, the street is definitely hoping that Scott Bessent is the calm voice in the room. I think they've been trying to elevate that potentiality, and you've seen it, whether it's Knives Out for Howard Lutnick or distancing themselves from the Peter Navarros and Kevin Hassett's of the world. From Treasury Secretary Bessent, I want to see some detailed conversations about exactly what nations are being negotiated with first. Some sequencing, Vietnam, Indonesia.
Okay, fine. Vietnam. She is flying into Vietnam today, I believe. Are you kidding me? What is the incentive for these people to negotiate with a vacillating White House? I mean, Gilles Moet this morning at AXA in Paris has a great quote, if I can find it. I'm not going to be able to find it now. But basically, he says, this vain moment. How do they negotiate?
And what are you even negotiating?
Exactly.
You want to bring the tariffs down from 1.5% to 0%? Yeah. I don't think that there's anything real to be gleaned from a negotiation with them, but I think the street wants to hear it. And frankly, I'd like Secretary Bessent to get very specific. We've had enough of these really broad statements about the whole semiconductor industry is excluded. Okay, let's talk about the actual magnets from China, the critical minerals.
Right.
What's going into what? Where are the cargo ships? Are they being hauled up at the ocean level? When are they going to be offloaded?
And Paul, you missed this. You were at the Masters. I mean, I can understand you missed it. Magnets? I mean, that's what this is. The granularity is going to come down to shirts from Vietnam, magnets from wherever, China, and something from Poland I can't pronounce. I mean, that's the reality, right?
That's exactly the reality.
So we have consumer confidence numbers coming down pretty dramatically. Inflation expectations coming up from consumers pretty dramatically. It's the economy, stupid. That's tough politics. What are Republicans in Congress who do have maybe some races coming up in 26? How are they trying to deal with what is potentially a very difficult economic fallout from President Trump's tariff? Even discussions, forget about implementation, just discussions.
Yeah, well, I think the polling data really tells them all that they need to know. And going into primary season, the Republicans need to be careful to stay to the right of Trump, not get on his bad side, because primary season is obviously where the very engaged voters go. So the latest data, I think it's from CBS News, is anywhere between 80 and 91% of Republican voters think that this is temporary, that prices will ultimately come down, and that we need to give the president more time. So that is their playbook. The real struggle is the independent voter, because now they're underwater. They used to be thinking that President Trump was going to be good on the economy, and now they're going in the opposite direction. They think this is going to lead to permanent higher prices. job loss, et cetera.
People ask me, who am I following? And of course, I just voice what I hear from Henrietta Trey. To me, the most important person inside the Beltway is Hakeem Jeffries. What does he do in the coming weeks to get the Democrats going, given this tariff crisis?
Well, I think really we need to see the next couple of weeks are going to be hard because everybody's on recess. But the focus on pharmaceutical tariffs, I think, is what you'll see. The individual anecdotes about manufacturing plants, small businesses going bankrupt, not having enough cash to stay liquid during the increase in tariffs, however temporary these may be, for a lot of companies, it's too long.
Doesn't he get on an airplane and go out to some district in Western Pennsylvania and try to find a center tendency Democrat who can actually compete against a majority Republican Pennsylvania?
I think they try. I mean, I've been materially disappointed by how
exactly
they've had no unification.
Whether you're Republican or Democrat,
100%.
They can't even get out to Illinois, which I think they could compete.
Yep.
When does that start with Congressman Jeffries?
And honestly, if it hasn't started already, when is it going to? Because it's been, 4 months now of this administration? There's plenty of things to discuss. I think they're underwater on the whole message.
Have you ever met Daniel Lanois down in New Orleans, a record producer?
I don't think so.
It's like ground zero. It's like magical. They did Chris Whitley's album down
Give
there.
us 30 seconds. How's New Orleans doing?
That's fantastic. It's so fun. French Quarter Fest this weekend was incredible. I went out there, heard the Dirty Dozen Brass Band. Come on down. It's a great time.
So it's just a great city. I've been here a few times. I need to get there more.
I was there with Martin Feldstein and Robert Schiller. All three of us were sitting there eating, and we said, "Can we not leave?"
Yep.
That's what happened to me.
You went down and just said, "I'm not leaving."
I went down 15 years ago, and I can't get out.
Lisa, does it say remote?
Yeah.
I mean, to me, it's just
surveillance remote.
Surveillance remote, New Orleans. Get
Come on
James
down.
Carville on it.
I'll make a phone call.
Henrietta Trace, do this more often.
Whenever you
know, if you need to get up here, we can free up the surveillance Gulf Stream and get you up here.
Fantastic.
We'll do that. Henrietta Trace, Veda Partners, huge value add for us.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.